Thanks for taking my question. First one is about the asset purchases. I wanted to know if you discussed changing the composition or the pace of the asset purchases. Most particularly, I'm interested in whether you discussed including junk-rated debt in APP. The second question is about OMT and whether you see OMT as an appropriate tool in the current crisis for some of the countries. Do you think a blanket ESM program for all of the Eurozone, as floated by some, would be a viable solution? Thank you.
Well, thank you very much for your two pointed questions. I'm going to take the opportunity of this first question to take you back a little bit to the last 2 days that we've had with Governing Council members. And I also want to take this opportunity to walk you through the masses of changes that the Eurosystem and the ECBs together have decided, and for most of them actually now implemented in the last few weeks. So in terms of the current situation, we are facing an economic contraction of a magnitude and speed that is unprecedented in recent history. The spread of the coronavirus and the associated containment measures have literally halted economic activity to a large extent across the globe. And we're seeing a rapid evolution of the economic effects of the necessary containment measures in our area. Initially, there were only some sectors that were badly affected. We were talking about transportation, we were talking about tourism, we were talking about entertainment. And gradually, as the containment measures took hold, entire sectors of the economy, to a large extent, were simply shut down. And it's reflected, and it will continue to be reflected. The hard numbers are just beginning to come. We just had a few numbers from the first quarter. And frankly, our forecast for the second quarter in our severe scenario points to minus 15% on a quarterly basis. Consumer business sentiment indicators are in free fall, while labor market conditions have deteriorated massively. If you look at the PMI composite, for instance, in April, 13.5%. And it comes from 29.7 in March, and before that, 51.6 in February. And that decline, which is also quite remarkable and explains quite a lot of things, was driven by the manufacturing sector, but very much so by the service sector as well. The European Commission flash consumer confidence also dropped to minus 27.7%. And if you look at labor forces, it is now more than 718,000 companies in Germany that have applied for the short-term special work program. In France, the number of companies that have applied for the chômage partiel, the unemployment special schemes, went from 24,000 to 425,000, covering over 10 million employees. And in Italy, it's more than 4.6 million employees that are covered. And we do not still have clarity about the course of the pandemic and the duration and the degree of remaining containment measures that will be taken, which of course is critical for us to actually take an assessment of what the economic situation will be. It makes our job of forecasting and all those who are trying to forecast around the world extremely difficult. As I said, our growth scenarios on an annual basis, from the mild to the more severe, vary from 5 to 12% negative, depending on the containment measures that are taken. Now, of course, as and when the containment measures are lifted, we expect a recovery in economic activity, but we cannot tell at what speed and what will be the scale of it. Now, let me now turn to the number of measures that we have taken since March. All those measures are aimed at, number one, ensuring ample liquidity conditions Number 2, protecting the smooth flow of credit to business and a household, and preserving highly accommodative financing conditions. So those are the 3 goals we're pursuing. And there are pandemic emergency purchase program, 750 billion euros, combined with our increased APP decided on the 12th of March, 120 billion euros, combined with our monthly purchases of 20 billion monthly euros, we have over 1 trillion euros that we can deploy and use until the end of the year to purchase assets. Our new targeted lending facility provides for around 3 trillion euros in liquidity to banks at a negative rate. And this rate can be significantly below our policy rate. Third, we have also significantly eased our collateral rules to ensure that banks can continue to make use of the refinancing facilities, ensuring that our monetary policy tools remain effective even in times of severe financial market stress and against the backdrop of looming rating downgrades. So these measures altogether form a really powerful package and are providing crucial support to the euro area economy, notably to those sectors most exposed to the crisis. And I will tell you, as the economic situation is evolving rapidly, we are constantly monitoring the situation and evaluating each of those measures as standalones and as part of the package to test whether they are still properly calibrated and sized appropriately. And in light of this, and with the view to further ease the conditions for banks to provide credit to the real economy, we decided to take further action today. So we eased the conditions of our TLTRO3. What did we do? We reduced the interest rates for the period from June 20 to June 21 by a further 25 basis points. The rate in TLTRO3 can now be as low as minus 1 percentage point, We also decided to create a new instrument that we call PELTRO, the Pandemic Emergency Long-Term Refinancing Operation, which is intended to support liquidity conditions to the entire euro area, to the entire financial system, to contribute to preserving the smooth functioning of money markets by providing effectively a liquidity backstop. And these operations will be carried out at fixed rate tender procedures with full allotment at an interest rate that will be 25 basis points below the average main refinancing operation rate, or MRO. The Governing Council, and we discussed that over the last 2 days, is more determined than ever to strengthen its commitment to ensure supportive financial conditions across all sectors and countries so that they can absorb this unprecedented shock that we are experiencing. And with this in mind, we will make full use of the flexibility that is embedded in PEP and in other components of our policy toolkit to ensure that our monetary policy stance reaches all sectors and countries in the same manner. I'm saying all that to you to address your questions, because as one of the decisions that we made and that I just commented, we decided to enlarge the pool of collaterals by effectively freezing ratings where they were on April the 7th. We provided for a floor, which is at CQS5, but that gives a large pool from which banks can actually draw in order to get financing. We did not discuss the APP, But let me remind you that, again, we are fully flexible. We will look at all options. We will determine and monitor. And we will make sure that our monetary stance and our monetary policy transmission are both effective. Your second question dealt with OMT. Now, let me remind you that OMT was conceived back in 2012, and there was full publication about the terms and conditions and characteristics of OMT. And OMT was intended for particular country cases under particular circumstances, where because of fiscal policy or structural policies, misguidance, there was a potential risk out there that the euro area be at risk and that it would be self-fulfilling. Those were the days. We're no longer facing that situation. We're facing a situation where it's not a single country, but it's all countries, where it's a global shock that applies in a very symmetric way. So the best tool that we have in our toolbox is indeed the Pandemic Emergency Purchase Program, PEP. Now, of course, OMT remains part of the toolbox, and we're not suggesting that we would eliminate OMT. But for the crisis we're going through at the moment, PEP is clearly designed to that effect. Added to which, the triggering of OMT, of course, is a matter for the Governing Council to decide. I think I've dealt with your two questions.